Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show. Actually, weekend wrap-up show. Hope everybody is having a great weekend. Finally, some nice weather. A week ago, I was in 85, 90 degree weather on vacation with my family. Came back into the horrific New Jersey weather we've been having, like it feels like for 10 years, but it only been like 8, 9 months. And finally, we're getting back to some beautiful spring weather. So cross our fingers. Hopefully, the end is over. So hopefully, we'll continue to get progressive, nicer and nicer weather. So hopefully, you guys are having a terrific weekend, getting some rest, reflecting, all that good stuff that makes life worth living with loved ones and family and friends and all that good stuff. So let's get into the market. So you had a very interesting week last week. Okay, you had pretty flat prices along the scoreboard. Okay, all the indexes were up about 0.5%. NASDAQ, S&P, and Dow Jones Industrial Average. What I liked and didn't like about last week, some of the key takeaways. Number one, before I left on vacation, we entered a distribution channel. For those of you guys who are joining us for the first time, a distribution channel is where the bulls and the bears are fighting control. And while they're fighting control, there's not enough aggression for the market to go higher, and there's not enough fear for the market to go lower. So again, it's that old analogy that I've been using over and over again. It's like picture yourself in a phone booth, and again for all you guys who've heard this 10,000 times, it's the reality. Picture yourself in a phone booth, you and somebody else are sitting there and having a pillow fight, right? Nobody's gonna do any damage, nothing's gonna get resolved, but what you're gonna do is you're gonna burn a lot of equity. You're gonna burn a lot of mental equity. When a market enters a distribution cycle that we saw the previous Monday or the previous Thursday going into all spilling all the way into the Wednesday session, what we saw was the bulls and the bears fighting over control. The problem was nobody wanted to stake their claim. And what happened was the contraction candles, right? The contraction ranges got tighter and tighter and tighter. And that's where the majority of traders use the word chop, right? Everybody used the word chop. And that's a very, very deadly cycle. It's almost as bad as getting really destroyed financially, because you are burning something you don't get back, and that's mental equity. When you burn a lot of mental equity, you start getting, you start losing focus on what's important. You start deviating from your process, and the next thing you know, lights out, right? Lights out, your game is over. So it's very, very important to recognize a distribution channel. I've been doing this for a very, very long time. It's very, very obvious. It's always very obvious to me because, again, we trade the most aggressive stocks in the market. Again, for those of you guys joining us for the first time, and Tesla, NVIDIA's, Amazon's, Amazon's and Netflix and NVIDIA and Baba and all that good stuff. So when they start shrinking, we know there's a problem. They usually don't start shrinking because they just want to. They start shrinking because there's not a lot of conviction one way or another. And that's what we started seeing. The good news was distribution only lasts for 4 or 5 days. And when I was gone on vacation, the first 3-4 days we saw pass. When I got back on Monday, we needed a catalyst, right? We needed a catalyst to kind of expand the ranges and make things right again. And what happened was Netflix came out with earnings. And yeah, look, was their earnings kind of weird, right? But all intents and purposes, they did come out with blowout earnings, right? They did come out with blowout earnings. And what happened was, it really took all the FANG stocks with it, right? It took all the beta with it. Amazon went through the roof and had their own news midweek about the whole 100 million subscribers for Amazon Prime, which is phenomenal, absolutely phenomenal. And it just took everything up with it. You had Amazon had a big run this week. You had Amazon, you had Google broke out this week as well. So really good stuff, really good stuff. And then somewhere in the middle of the week, and by the way, just before we get into the middle of the week, an important point, and this is what we talk about all the time, of kind of living life and kind of trading through a fog. If you guys remember 2-3 weeks ago, even a month ago, the whole China trade issue was a big deal, right? A lot of people saw big volatility, huge gaps both directions, 600-700 point intraday swings, and they called it volatility. I personally thought this was a new market, but we had that tangible news. You had the whole China news on the table. A lot of uncertainty, and if you don't trade beta, you had a lot of problems on your hands because a lot of your stocks, non-correlated beta names, they were impossible to trade because their range is already so tight. They're only going to get looser. They're only going to get tighter, but you have a lot more wider spreads and a lot thinner bids. And when you trade in a micro cycle like that, you're going to feel the effects more. The great part about trading beta is, well, we trade both sides of the table. We'll demonstrate that in a second. We trade both sides of the table sometimes the same day because the ranges are big enough and they're correlated into our process very, very well. But what was disturbing about this trading week from a macro cycle, okay? So Netflix brings up all beta, right? Or brings up all beta. The market's strong Monday, Tuesday, Wednesday. And if you look at the NASDAQ 100, right? If you look at the NASDAQ 100, we reclaimed the 50-day moving average, which is super bullish. We didn't reclaim the 50-day moving average since, what's this day here? Since January, February, March the 21st. So it was kind of a big deal that we reclaimed it. And the next day we went higher. And then the following day we backtested. If you guys remember, that was the day the SMHs got really hit, got really hit. What I didn't like from the macro point of view, what I didn't like about it was the next day, and we held the 5-day moving average off that back test. The next day, if we would have truly maintained a very, very strong, aggressive market, especially in the tech sector, we would have rebounded off the 5-day moving average. Again, for all you guys who are joining us for the first time, a lot of people don't put a lot of emphasis in the 5-day moving average. I have for many, many years. It's not that it's technically make it or break it, but it does show me, at least gives me a very, very good understanding where the possible next leg move can be. So if we hold the 5-day moving average, for me, it represents short-term sentiment. And if we lose the 5-day moving average, again, if you believe in the theory that stocks go from supply to supply and demand to demand, well, we lost the 5-day moving average on Friday and we tested the 10-day moving average. So going into Monday's session, you could see, again, if you believe in the theory, stocks go from demand to demand as well, then Monday's session is going to be very, very important because if we start losing the 10-day moving average, and again, I believe that's the birth of the trade, both the long side and the short side, that if we confirm Friday's lows, we're going to start going down. We're going to start going down to the 20. And if we start losing the 20, we're going to go all the way down to the fifth, to what is this line right here? To the next supply zone, which is the 150-day moving average. So it's very, very, it was a very, very unsettling kind of cloudy, two-sided, two-sided story for the bulls and the bears last week. And again, the most important part was the China news kind of became stale. We started to live with it. We started becoming numb to it. So every headline, China good, China bad, didn't result in a spike and in implosion in futures. We had two different markets, but we had two different scenarios. But the good news is they kind of put the China news not necessarily to bed, but the knee-jerk reaction to every single headline kind of got muted, which you want to see. Again, the last thing you want to do, I don't care what type of trader you are, you don't want to trade a market that's uncertainty, especially having overnight exposure, because when you do have overnight exposure, the momentum game gets killed. It becomes a 50-50 toss-up because you are literally living from headline to headline. So it was actually the good positive about last week was we did go numb to the China headlines, which was good. The negative takeaway I didn't like what I saw, especially from the NASDAQ 100, was how easily we gave back the 50-day moving average after 2 days of really, really strong action. So it's something for us from the macro side to kind of pay attention to going into this week. One big misconception, I just want to kind of talk about the beta situation. People ask me all the time, well, Dan, because I trade 95% of all beta names. And they asked me, isn't the success, right? Isn't the success of beta tied in with movements of futures? So for example, if the futures explode, Amazon goes higher. If the futures implode, Amazon goes lower. Yes and no. Of course, they're market sensitive instruments. Absolutely. They're going to be market sensitive instruments, but there's always a curveball. Okay. The most important part when you're trading beta, okay, number one, they move organically off of confirmed channels. We know that. We also know that they're going to give you cash flow majority of the times. We know that. The question is how much cash flow? We don't know. It could be 30 cents. It could be $3 within one candle. We don't know. If I knew, I'd be going max size for every single $3 move. We don't know. We can only trade around it. But the one thing that I do know, they're not completely tied into futures, because if they were, I would just be trading futures. There's no reason for me to trade stocks if futures would just dictate the whole market. So the reason why I trade these things, they stand on their own 2 feet. Of course, they do have some sort of correlation with the futures. But for example, like Friday's session, let me give you an example on Friday's session. So Snapchat, for example, actually let me start going with the whole with the whole list. So Friday, was starting, turned out to be a decent day. And again, for all you guys who can't make it into the live webinar, again, we have a private Twitter feed. We've been demonstrating these pivots now for 4 years. In the last month or so, we made it private. And for less than $1 a day, literally less than $1 a day, if you can't make it to the live webinar, I understand people work, all that stuff. Again, there's no substitute for the live webinar. You see us exactly how we play these things, everything, all the moving parts around it. That's exactly what we talk about every single day. But if you can't get into the live webinar, this is definitely the next best thing. It's only $20 a month, and it's been really very, very well received in the first month. So, and you can see why we trade beta, because it's a two-sided market. As long as there's confirmation, we don't care which way the market goes. Obviously, if there's a daily scenario that plays out, we're going to emphasize that. So we started the day here, hey guys, keep an eye on Tesla. It looks like, if you guys remember, the previous day, the previous low was 298, okay, 298. And if they reclaim the 298, there's going to be a really, really good potential that the shorts are going to get trapped. So, I tweet, I just put it in the private feed. Obviously, I put this in the live room. Let's see if they trap shorts and, the stock can possibly go green. If you notice what happened here on Tesla on Friday, here was the cycle right here. Here was the cycle right here. They trapped the shorts and the stock went up $2 really, really quick. Again, not every single trade needs to be a 5-run home run. A couple of bucks on Tesla, especially for me, it's always my biggest position. So anytime you trade Tesla, listen, $1, $2 is great. It's great. You get $3, $4, $5 candle. It's phenomenal. So you don't need a home run every single trade. We can't plan on a home run for every single trade. We're looking for we're looking for singles. We're looking for manufacturer runs, hit by a pitch, take a walk, get on an error, hit a double, whatever it takes, get on the base, stay in the game. So nice move here, $2 move pretty quickly off that 298 level, touched the $300 area. Which became supply the previous day. That's why it got rejected. And you kept on seeing progression throughout the day. Next thing we talked about, I tweeted this out pre-market. Hey guys, watch Square 5180, 52. And again, there's a reason why these things are very, very meticulous as point of triggering confirmation. Watch Square 5180, 52. Again, was it the biggest move in the world? But no, when the futures were imploding, right? When the futures were imploding, here was the move, 5180, right? 5180. It confirmed above the 52 and the stock went to 5250. Again, was it the biggest move in the world? No, but again, we take what the market gives us. It doesn't make a difference. Here's another scenario. Perfect. Beautiful trade. And congratulations to you guys who took the trade. And again, people are so sensitive on social media. Okay, look, guys, I'm not there. Look, I love Amazon. I use Amazon as much as anybody on the planet. And yes, I believe the stock will probably see $2,000 a share. But in the meantime, when there's an opportunity to trade the stock both ways, I couldn't care less which way the wind blows. If there's a channel and there's a $10 channel or $5 channel or $4 channel, it's going to give us the ability to get cash flow. I don't care what happens tomorrow, the next day, next Friday, next millennium. We want to win our interval. We want to win our battle. And I get all these tweets and stuff. Oh my God, you don't know what you're talking about. Amazon's going to 4,000. Yeah, I know that. We know that. We all know that. You're telling us something we don't know. We're just trying to win the interval. So anyway, here's a tweet I sent out. If futures implode, which they did, 1546, if it starts to build lower, it can flush. Again, guys, I understand it's going to 2,000. Again, I understand it's going to 2,000, but it's not going to go to 2,000 today. Here was a sneaky pivot right here, 1546, and once it confirmed, stock went to 1516. So yes, it's going to 2,000, but it wasn't going to 2,000 on Friday. So good job for all you guys who took that. I took some cash flow. No, not a bad trade at all. Spot was the biggest, Spot was the fastest trade of the day. I tweeted this, I put this out pre-market. It was one of our focus stocks. It was on our watch list literally for 3 days. Watch spot, 156, big level, needs to build. Look what happened. I took roughly about $1.50 in trade, roughly about 30 seconds. Congratulations for you guys who caught it as well. Here was the 60-minute channel right here, this whole 156 area. Once it broke 156, it just absolutely exploded. I actually like the stock for Monday. Look how strong the stock was for Monday. Big, beautiful move there as well. The reason why I bring this up, I think that was the last pivot of the day. Yeah, and you can see here, I illustrated the 156 spike, how fast it was. It was like 30 seconds for $1.50. And then you saw towards the end of the day, this is where I logged off. I had a doctor's appointment early. And this is where you see why we trade beta. You could trade the same stock, the same day on different sides of the market as long as there is confirmation. And again, I tweeted this out right around lunchtime. And you guys, watch the 293.30 linear regression support. If it builds lower, it can flush. And look what happened to Tesla, right? Look what happened to Tesla. Again, these are nothing's edited, guys. The greatest thing about trading beta, this is in real time. This is in real time. Here's the whole supply right here. Here's the whole support right here. And once it broke, this thing got absolutely hit. It got hit for about $4.5, $5 towards the end of the day. And I really, really like this. This is do or, if you can see by the 60-minute chart, this is going to be really, really do or die for Tesla going into this week. So it's something that I really, really, well, I pay attention to it every day, but it's something that I really want to concentrate. So the question is, are beta names correlated with the futures? And yes and no. Yes and no. Like, for example, I even tweeted this out. I forgot at one point in the day, but I tweeted out at some point. I said, Amazon's just not rallying. Oh, here it is. Here it is right here. Amazon didn't rally with the futures in the last move. That's when the market went from down 200 to down 150. And I said, well, it didn't rally with the futures. If that 1540 now confirms, this is after the 1546 poll, if that 1540 confirms, it should see more. And that's exactly when the stock got hit for another $10, $12 or so. So it's very important to, it's very, very important to watch the futures, no doubt. If the market is exploding, the last thing you want to do is short Amazon. But a lot of times they will kind of trade on their own 2 feet. So we saw the Dow kind of rallying and Amazon couldn't. And that was a very, very big sign. And for example, Spotify, when the Dow went back down 200 points, it got stronger. So yes, do they trade with the futures? They do, but not all the time. And that's a very, very important level for tomorrow's session. So going into tomorrow, I'm open-minded. I'm open-minded on the buy side, but I kind of didn't love what I saw. I really didn't love what I saw. I also didn't love what I saw on Netflix that couldn't sustain a rally on Friday. I caught it pretty well, red to green. I know a lot of us in the live webinar caught a red to green, but I just didn't like the fact that once it confirmed that 335.50 level, that only put in a dollar move, and on that dollar move was very, very choppy. So something for us to see, and I don't like the fact that we tested the 10-day moving average so easily, after that strong run up above the 50-day moving average. So that's a big red flag as well. So we'll get a lot of early signs. On Monday that could set the tone for the rest of the week. So I'm going, I have an open mind for Monday. I want to see how beta reacts in the morning, especially in the first 2 candles. It's very, very hard to put a definitive yes, we're bullish. Yes, we're bearish. We need a little bit more evidence, a little bit more data. Very bearish that we lost the 50-day. Very bullish that we held the 10-day. But we'll see what happens there. You know what I'm saying? We'll see what happens there. So, guys, have an absolutely wonderful Sunday for all you guys who are joining us in the live webinar. Morning strategies, links to the room go out at 8 a.m. Eastern time every single day, followed by morning strategy at 9 for all you guys who are joining us tomorrow via the PS60 live feed on our private Twitter account. Welcome aboard. I start putting in pivots roughly around 9:20, about 10 minutes to the open. Anybody has any questions, feel free to email me. Guys, have a blessed weekend. God bless you all. Stay happy. We only have one life. Learn to smile. Life is not that serious, okay? Trading is not that serious. Be a good person. Learn to smile. Say hello to somebody. Make somebody's day. And God bless you all. See you on Monday. Take care.